we need to do something quickly. You mentioned 38 trillion in debt and a trillion in interest payments, which is the number one line item. We added a trillion to the debt in 71 days recently. It's
Yeah, it's
accelerating.
crazy.
Our fiscal irresponsibility is ridiculous. 60% of America can't read past the sixth grade. 60% of America has no college education. Most people in the country can't write out a check for $5,000 for an emergency. We're
Wow.
broke, we're insolvent, and the 38 trillion doesn't take into account the over 100 trillion in unfunded, 150 trillion in unfunded liabilities, Medicare and Medicaid, and Social Security and government military pensions. And I don't know, there's divisiveness in politics. There's, after the last 4 years of policy that was too stupid to be stupid, we've now entered a period of time where I think it's all about, an acceleration in a new system that's coming. So I'm concerned that we have hard times ahead of us. And I think what President Trump is trying to do, if there's any nobility in it, is to really debase the dollar, to devalue it, to ultimately bring back manufacturing and to relinquish, according to Triffin's dilemma, relinquish the reserve standard. If we are the reserve currency, we will never have a manufacturing base. We will always run trade imbalances. I believe they want to get rid of the world reserve currency. They want to bring back manufacturing. And if Judy is right, and they peg gold to the back end of the treasury market next July, you can bring back with a 20, 30, and 50-year treasury redeemable in gold with zero coupon, no interest in 20 or 30 and 50 years. You can bring back manufacturing immediately with no upfront borrowing costs. And with the passage of the Stablecoin Act, the Genius Act, you look into it and you see that every time money moves, stablecoins will be created. And the interest, because they're backed by U.S. treasuries, the interest that is generated is not transferable. Tether, as an example, USA Tether, by the way, their CEO is Bo Hines, the guy that was Trump's crypto advisor until August. He's not US or the CEO of USA Tether, which is already stablecoin Genius Act compliant. They will back everything with treasuries, which creates synthetic demand for the treasury, pushes rates down, but they will take the excess, the interest between the stablecoin and the treasury, and they'll buy gold. And I think they'll buy Bitcoin, and they'll buy gold to make it go much higher. They already have over 8 billion worth. They were just at the Beaver Creek Mining Summit. They're going to continue to buy gold to devalue the dollar and to ultimately peg the back end of the treasury market to bring back manufacturing, because we need to. Our children and our grandchildren are dead otherwise with illiteracy and uneducated masses and a massive spread between the haves and the have-nots and no manufacturing base and massively indebted. We need to do this no matter what. And I think they will do that through devaluing the dollar massively by letting gold go higher. I think they'll let Bitcoin go higher and use it to pay off the debt. This isn't conspiracy. Read the order that next year they're talking about revaluing gold as part of the Bitcoin fund that Senator Lummis from Wyoming has been advocating for. And if they do revalue it, it devalues the dollar. It's not about revaluing gold, it's about devaluing the dollar to a much lower level so we can sell our products to the world. You have to bring back manufacturing. How do you do that? You peg gold to the back end of the bond market and you end up having zero upfront borrowing costs. Like in the Shawshank Redemption, there's 2 miles of shit that we have to crawl through to get to the other side, like Andy Dufresne did. And that's what happens with the irresponsible fiscal policy that we've had and the brain dead monetary policy we've had for all these years. To get to the other side, we need to produce things again. We can't be reliant on pharmaceuticals from aspirin to penicillin and everything in between from the Chinese, or aircraft components or military components. We need to be the engine of growth and manufacturing again for a population that, with this limited advanced education, 60% with no college degree, and AI will take 50% of entry-level jobs in the next 3 to 5 years, they say, well, we have to do this. So what am I concerned about? I'm concerned about tough times. I'm concerned about inflation and half-empty shelves that until we are able to get our fiscal house in order and start manufacturing again. I think that, unfortunately, that there will be a couple of years of difficult times, but I think there is reason for optimism if we are able to pull this off. At this point, what choice do we have? We can inflate, we can default, or we can try and grow our way out of the problem. And the only way you grow your way out ever is to bring back manufacturing and to give up on being the reserve currency. You look at all the BRICS nations, they're all talking about trading their local currencies and settling imbalances in gold. You don't see a common currency. You don't see a replacement for the dollar. Everyone used their currency, and gold is finding a common denominator that is trust within the system, whether it be in the Southern Hemisphere or up here in the United States. But something needs to change. And I'm concerned that if it doesn't, things are only going to accelerate in terms of our indebtedness and the effects that ultimately that will have on the reserve currency, because at some point, a currency that's based on trust that has lost a good deal of trust in weaponizing the treasury market, in sanctions, in tariffs that are actually sanctions that are masquerading as tariffs, and fiscal and monetary irresponsibility. The rubber meets the road at some point. So concerned that, tough times ahead, and the only way that you get out of this alive is to have assets. That is how you win. And the biggest, most well-informed money in the world know this, and that's why we're seeing billions and billions and billions and billions of dollars every month come into COMEX. So you know what? Get your own financial house in order and start accumulating assets. You save in dollars, you're going to go broke. One last point to that. You see the dollar index down. The dollar's down 7 or 8% this year against the dollar index. It was down 11. It's rallied a little bit, but it's down almost 70% in silver, even with this pullback, 65. So 60. So the point is, it's masked. The devaluation of the dollar is masked at looking at a basket of all the other brain dead crap currencies measured against something like gold or silver, and you see the real devaluation of the dollar. And this is a trend that will only accelerate.
We are at a crossroads unlike any other in modern American history. You don't have to be an economist or even a market analyst to feel it. The math simply doesn't work anymore. $38 trillion in debt, $1 trillion in annual interest payments, more than we spent on defense, healthcare, or education. We added another trillion in just 71 days this summer. It's accelerating at a pace that defies comprehension. This isn't fiscal irresponsibility anymore. It's fiscal insanity. And the scariest part? Nobody in Washington is hitting the brakes. You have a Congress that can't balance a checkbook and a Federal Reserve that thinks it can solve every crisis with more liquidity. But liquidity is just a fancy word for debt. It's water pouring into a boat that's already sinking. 60% of America can't read past the 6th grade level. 60% of Americans have no college education. Over half of our population can't come up with $5,000 in an emergency. We are not a financially literate nation anymore. We're a nation of consumers living paycheck to paycheck, hoping the next election will somehow fix what decades of mismanagement have broken. The truth is, we're insolvent. Not just broke, insolvent. When you add the $38 trillion in visible debt to the over $150 trillion in unfunded liabilities, Social Security, Medicare, Medicaid, pensions, you're looking at a hole so deep that no combination of taxes or spending cuts could ever fill it. The only way out is through. But through what? Through devaluation, through the painful, deliberate act of resetting the currency, repricing real assets higher, and forcing the financial system to restart under new terms. Now, I know that sounds dramatic, but look around. There's no other path. You can inflate, you can default, or you can grow. And growth, real industrial, productive growth, requires one thing America hasn't had for 40 years: manufacturing. That's why, for all his controversies, I think President Trump's real legacy might not be political. It might be structural. His administration is openly discussing something the mainstream media still refuses to touch: ending the dollar's reign as the world's reserve currency. And you might think, why would we give that up? Isn't that power? But it's not power anymore. It's poison. Triffin's dilemma tells us that the country issuing the global reserve currency must run trade deficits to supply the world with liquidity. Those deficits hollow out domestic industry. They turn the issuing nation into a service economy dependent on foreign production and cheap imports. That's exactly what happened to the United States. We became addicted to cheap goods and cheaper credit. We exported dollars and imported dependence. If we remain the world's reserve currency, we will never be able to rebuild our manufacturing base. Ever. The system doesn't allow it. The reserve currency must flow out, and that means factories must flow out too. So when Trump's team, people like Judy Shelton, talk about pegging the back end of the treasury market to gold, they're not being nostalgic. They're being strategic. They're talking about creating a dual system, a gold-linked sovereign bond market that restores credibility to long-term debt while allowing the short-term system to remain flexible through stablecoins and digital liquidity. Imagine a 20-year, 30-year, or even 50-year treasury that pays no interest but is redeemable in gold. That's a zero-coupon bond with a golden parachute. Literally. It would reintroduce trust into a market that's completely lost it. Investors would buy it not for yield, but for security. It would give the government a way to issue debt with no upfront costs, because redemption comes decades later. That's how you rebuild without defaulting. That's how you fund reindustrialization. You peg gold to the long end of the bond curve and allow the dollar to gradually devalue. That devaluation makes your exports cheaper, your manufacturing competitive, and your trade balance real again. Now enter the Stablecoin Act and the Genius Act, legislation that's quietly building the plumbing for the system. Under these laws, every time a stablecoin moves, it creates synthetic demand for U.S. treasuries, because those tokens are backed by treasury securities. The interest on those securities doesn't go to token holders, it stays with the issuer.
Well, I think it's when you look at it from the mainstream perspective, yes, much of what they said was valid. It had gone up, really unencumbered for 9 straight weeks. It was overbought. All of that's valid. All of that's true. It had busted through well in excess of moving averages, the 50, the 200. All that's true. It was ripe for a correction and a flush and a pullback, and all of that is true. And if it had been said that way, of course, they always throw in, is this the top, the 2011-1980 top, where it starts to head down and maybe, this is it, maybe look for other assets, Bitcoin or whatever the hell you want to talk about it. If they would have just told the other half of the story, I would have been more inclined to acquiesce to some of their validation or to some of the things that are valid. I think by not telling the whole story, it invalidates much of what they say. The initial snowball that was pushed down the hill was in the middle of the evening after all of the markets had closed and the New York traders were in bed, and it was sold in the access market, it being gold and silver, billions of dollars worth, in the middle of the evening when there's no liquidity, when the markets aren't there to catch the bids, and instead the driving down of the price, dumping it onto the market at strange hours. When it started, it was in the middle of the night. I don't remember exactly what time. And then the next day they did it at like 8 or 9 o'clock at night, when in between New York and Asia. Again, New York's closed, Asia hadn't opened yet. You see a price that's getting clobbered, because all that does is hit the sell stops that are embedded in algorithmic programs along the way, and they drive the price down. In other words, this was done as a drive-by shooting for an effect. There would not be a trader on the planet with a third of a brain cell that would dump all of this at a time outside of New York trading, where that's where the price is set. That's where the bids would be. They would do it slowly and judiciously over time, even a matter of days, that amount, slowly, without alerting or waking everyone up to a dumping of metal. And they would catch all of the demand for 9 straight weeks that have been growing up. They would have got a much better settlement. In fact, they guaranteed themselves the absolute worst settlement. And so the selling, triggering stops, made the market collapse. Now, what they also didn't talk about, and let's just stop right there for a moment. If they would have said all of those things, market's overbought, gone up for 9 straight weeks, the technicals said this is ripe for a correction, for a flush, for a pullback, whatever validation they want to attach to it, it's invalidated by not saying, by the way, some idiot dumped it in the middle of the night when there was no liquidity in the market and there were no traders, and this is done in the access market. Nobody would do that. They conveniently leave that part out. The other part that they left out was the second day, when it was done in between New York and Asia. Again, equally a stupid time to do it. Within just a few minutes, the silver price shot right back up. Well, how the hell did that happen? Well, if you look at Michael Lynch, and he does an amazing job at analyzing the COMEX movements. He says that it was Bank of America and Morgan Stanley that came in and did the purchasing. It was European banks that did the selling, and it's commercial banks, and it was Morgan Stanley that came in and did the buying. Well, why is that valid? Well, the chief investment officer of Morgan Stanley recently came out and said the 60-40 rule of investing that Wall Street's used for, I don't know, 50 plus years was invalidated now by, um,
60-20-20.
yes, in other words, sell half your bonds and put 20% into.
Let's talk about the human side of this, because numbers alone don't capture the urgency. When 60% of your population has no college degree and AI threatens to automate 50% of entry-level jobs in the next 5 years, you don't just have an economic crisis, you have a social one. We are producing fewer goods and more despair. People are angry because they feel the system is rigged, and they're right. Wages haven't kept pace with inflation in 40 years. The middle class has been hollowed out. The American dream now feels like a subscription service you can't afford to renew. And this is what happens when a country stops producing and starts speculating. When finance replaces factories, wealth concentrates in the hands of those closest to the money spigot. Everyone else gets debt. If we want to fix this, we have to rebuild the foundation. And that means bringing manufacturing back home, even if it means a weaker dollar. That's not nationalism, it's survival. A strong currency is only good if it serves a strong nation. Right now, the dollar's strength is killing us. It makes our exports uncompetitive, our factories unprofitable, and our workers disposable. The only way out is controlled devaluation, a deliberate lowering of the dollar's external value to restore internal balance. That's what Trump's team is signaling. If Judy Shelton's gold-linked treasury plan becomes reality, the U.S. could issue long-term bonds redeemable in gold, effectively reintroducing discipline into the debt market. Investors worldwide would buy those bonds, knowing they're tied to real collateral. At the same time, the Stablecoin Act would provide liquidity to the front end of the market through digital rails. Every transaction would be a micro-purchase of treasuries, creating constant demand and liquidity for the system. Together, those two components, hard collateral on the back end, digital efficiency on the front, create a hybrid monetary system, a fiat gold fusion. Now let's be clear, the real point of this system isn't to make gold shine again, it's to devalue the dollar. Because when you revalue gold upward, you're not really changing gold's worth, you're changing the dollar's weight. If gold goes to $10,000, the headlines will scream gold skyrockets. But what's really happening is the dollar's purchasing power is being marked down to reality. That devaluation cuts the real burden of our debt in half overnight. It makes exports cheaper, brings factories back, and kickstarts domestic production. This isn't just speculation, it's policy in waiting. The IMF has already floated similar ideas for a gold-anchored SDR. The BRICS bloc has already started settling trade in gold. The US can't fight the tide forever. We either adapt or get left behind. Now here's the kicker. The rest of the world isn't looking to replace the dollar. The BRICS aren't launching a common currency. They're using their own currencies and settling differences in gold. That's not anti-dollar. It's post-dollar. And the US will have to join them if it wants to stay relevant. This is why I believe we're seeing such massive inflows into COMEX right now. Billions of dollars per month, even as prices fluctuate. The smartest money in the world, sovereign wealth funds, central banks, family offices, know what's coming. They're front-running the revaluation. You can see it in the numbers. The dollar index might only be down 8% this year, but measured against gold or silver, the drop is catastrophic. Down 65% in silver, down nearly 70% in gold over a multi-year stretch. The dollar's devaluation is already underway. It's just being masked by comparing it to other failing fiat currencies. That's why the average person doesn't feel it yet. They see a strong dollar on CNBC, but they also see their grocery bill up 30% and their rent up 40%. They sense the lie even if they can't quantify it. That's what happens when the currency you live in no longer measures reality. It distorts it. So what happens next? We're likely heading into 2 or 3 years of turbulence. Inflation will persist, the shelves will be thinner, interest rates will stay high until they can't, and then we'll pivot into the mother of all liquidity waves. That's when gold, silver, and Bitcoin will take off. Not because they're investments, but because they're the only assets left that can absorb the excess. The key will be to survive the transition. Get your personal balance sheet right. Stop saving in dollars. Own things that can't be printed: metal, land, productive assets. And remember, this is not the end of America. This is the painful rebirth of it. We've been here before. In 1933, FDR devalued the dollar by 40% overnight. It was chaos at the time, but it laid the groundwork for the greatest industrial expansion in human history. We can do it again, but this time, it won't be physical gold bars behind bank vaults. It'll be a digital ledger with real collateral underneath. It's the same principle, just a different interface. So yes, the next few years will be hard, but if we get through them, we'll have something solid again. An economy that produces, a currency that's trusted, and a middle class that can thrive. The choice is simple: inflate, default, or grow. We've inflated. We can't default, so we must grow. And growth means manufacturing, devaluation, and gold. Get your own financial house in order now, because the system's reordering itself whether you're ready or not.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.